Hi guys, in today's episode we are going to be going over a very simple yet easy to grasp trading strategy that can yield really good results, especially within the crypto market, to make sure you guys can start earning money as soon as possible. So what is this trading strategy that I am talking about? Well, it is called the Relative Strength Index Trading Strategy, or the RSI trading strategy for short. Now, what is the RSI? Well, it is an indicator that is going to show us when a market is overbought or oversold. It shows the movement of buyers versus sellers. So how do we find this out? Well, one, I'm using TradingView. I recommend it to everyone. When you are marking up your charts, use TradingView. I make no money off this. I'm not affiliated with them, but the gold standard. So I'm assuming you guys have your own TradingView account. So what I'm going to do here is I'm going to click on the indicators tab and I'm going to click RSI. Now you would think that I would click on the RSI strategy. No, I don't want to do that. There's a few added extra ones. Someone has built that RSI strategy. That's not what we're looking for today. All we want to click on is the relative strength index. Before we do that, let's click on this show description button, this question mark, just to give you a bit more in-depth knowledge about what's going on. Because if you know what the RSI actually is and what it does, then you can further use it to your advantage in the markets. So I'm going to click on this button here. So we're going to be concentrating on the definition. The history and the calculation doesn't bother us because the RSI does the calculation for us. So why would we ever need to know it? And then we'll just be going what to look for, overbought and oversold. Divergence is something that we are going to be going over in a different episode. But the best one, the easiest one to learn is this overbought, oversold. So what is the RSI? Well, basically it shows the momentum. It's a momentum-based oscillator, which is used to show or measure the speed and change of directional price movements. So essentially when the RSI, when graphed, it provides a visual mean to monitor both the current and historical strength and weaknesses of a particular market. Strength and weaknesses being when it's at its highs, and its weaknesses are when it's at its lows. So what we are going to be looking at over here is what to look for. Now that is overbought and oversold. So when prices rise very rapidly, momentum was high enough that when we're looking at all the historical data, sometimes it would break through that. And it would be above that. It would break through the historical mean, should we say. So if you go back to when Bitcoin first started, what we're looking at is the normal buying and selling habits of everyday traders, right? But sometimes that would break above. There'd be massive peaks of buying when it would be way overbought, because the historical data says it's going to be within this range. And it's the exact same principle for oversold. So let's have a look at what that actually means to give you some context to that. So if I click on relative strength index, here's what we can see. We can see this little range that's colored in this bluish, purplish, I guess, hue. So this is the historical data. Right here, the middle is obviously the mean, the middle point of this entire range. And then what we can see is this little line graph here. But what we can actually deduce from this is that it's moving up and down. And it's basically mimicking the markets, just like the description said. It's just when graphed, it mimics the markets and it looks basically just like it. It's just showing the momentum of buying versus selling, right? Obviously here it's showing there's a lot of buying going on, shooting it up, and then right after a lot of selling. Now don't worry if it looks a little bit different. What I said previously, when that's divergence, we're going to be going over that in a different episode. That's a different RSI trading style. For this one, we're just going to be looking at overbought and oversold. So by now, you understand what it is, what we're looking for. So let's get into how to actually make money by using this. Now, what we want to do is make sure we are not trading against the trend. For example, what we can see over here is that many times, and even here, and if I go to this low where it says oversold, look at the little dotted line. It literally shows me exactly where it's oversold, exactly which candlestick is oversold. If I go here, I can tell it's exactly this candlestick. And if I go over here, I can tell it's this candlestick. But if it's oversold, we would think, hey, the market needs to recorrect itself. It's obviously oversold. It wants to go back up into this area, which it does do. But as we can see, the market in itself actually continues to fall. So this is where divergence is going to come in later, but we don't want to look at that right now. We want to follow the trend. So for us, we do not want to counter trend trade, which means we are going in for buys when the market is clearly falling. What we want to do is look at this area. We can see that the market quite clearly has been falling. We've got a high up here, a lower high, lower high, lower high. We've got a lower low over here as well, and then two lows over here, which do form a double bottom, but that's absolutely fine. But what we can see here is the market starts to peak above this historical range, right over here, and then it falls. The market corrects itself. What happens over here, guys, when it's really pushed up? The market falls and corrects itself. So it's incredibly simple. We are going to wait for the market to be oversold. And if I zoom in on here, so we can see this a little bit easier. Right here, we can see that the market is overbought. Sorry, it's overbought. Now what we're going to do is wait until the end of this candlestick to be formed. So it's this one here, this big green one, and that happened at my 10. So we're going to wait the entire hour, because we're in the 1 hour time frame, and we're going to wait until 11. We are not hopping in at 10:58 or 10:57 or 10:59. We hop in at 11, because this wick here is extremely important. So what we do in that next candlestick is we hop in for a sell. And what we're going to do is put it just above this wick here, because we can see it actually comes up and tries to retest it later on. We want to give it a bit more space, and we're always going to trade with stop loss. We're always going to trade with stop loss, because here on this channel we want to be consistently profitable and we want to protect your investment. And then what we're going to do is aim for a 1-to-3 risk to reward ratio. You can tell it's a 1-to-3 because this says 3 here. It's just triple the amount our stop loss is. And when you're going in and you go on Binance or whatever you're using, you can just plug in your stop loss, plug in your take profits, and just market execute. It's as simple as that. Let's go for another example, right? And I can do this and I can go on replay. Say we catch it over here, right? We can quite clearly see it's massively overbought. We go amazing. This happened at my 5 a.m. We wait till 6. We hop in on this candlestick here. We're shorting again. I place it just above here. Remember, we just give it a bit of space. If you wanted to say, Alex, you know, how much space am I actually using? Just say, give it a small Wix breathing room. Just give it another Wix breathing room. And what you can see here, if we zoom in, is that I can give it another wick in here. If we just measure this out really quickly, what you can see from here to here, it's exactly the size of that other wick. Perfect. And then again, what we are going to do is aim for a 1-to-3 risk to reward, which is roughly around here. And we can see it takes some time, but then the market starts to fall off the face of the earth. And we make that. You know, potentially later on in life, when you get a little bit better at this, you're not aiming for a 1-to-3, you could be aiming for a 1-to-12. And that's what the RSI can